Economic chaos is erupting literally all over the planet, and global leaders are starting to panic. Submitted by Michael Snyder. Mainstream news outlets are already starting to use the phrase economic collapse to describe what's going on in some areas of our world right now. For many Americans, this may be a bit strange, but the truth is that the worldwide economic slowdown that began during the second half of last year is starting to get a lot worse. In this article, we are going to examine evidence from South America, Europe, Asia, and North America. Once we are done, it should be obvious that there is absolutely no reason to be optimistic about the direction of the global economy right now. The warnings of so many prominent experts are now becoming a reality, and what we have witnessed so far are just the early chapters of a crushing economic crisis that will affect every man, woman, and child in the entire world. Let's start with Brazil. It has the 7th largest economy on the entire planet, and it's already enduring the worst recession in 25 years. In fact, at the end of the last year, Goldman Sachs said what was going on down there was actually a depression. But now the crisis in Brazil escalated significantly. I want to share with you an excerpt from a recent article entitled "Brazil Economic Collapse Worse Than Feared." I know the title sounds like it comes directly from the Economic Collapse blog, but I didn't write it. It actually comes from CNN. Amid political chaos, Brazil's economic collapse is worse than governments once believed. In the midst of rising calls to impeach President Dilma Rousseff, Brazil's central bank announced Thursday that it expects the country's economy to shrink 3.5% this year. That's worse than the central bank's previous estimate for a 1.9% contraction. The darker forecast matches what the International Monetary Fund projected for Brazil, Latin America's largest country, and what many independent economists have suspected. It's one thing for Michael Snyder to tell you that Brazil is in the midst of economic collapse, but it's another thing entirely for CNN to say it. And of course, I've been warning about the crisis down in Brazil for quite some time. For much more on this, please see my previous article entitled "The Economic Collapse of South America is Well Underway." Meanwhile, things are actually much worse in Venezuela than they are in Brazil. Food and basic supplies are in short supply. The inflation rate has hit 720%, and crime is completely out of control. The following is from an article from The Independent entitled "Venezuela is on the brink of complete economic chaos." The only question now is whether Venezuela's government or economy will completely collapse first. The key word there is completely. Both are well into their death throes. Indeed, Venezuela's ruling party just lost congressional elections that gave them opposition a veto-proof majority, and it's hard to see that getting any better for them anytime soon, or ever. Incumbents, after all, don't tend to do too well when, according to the IMF, their economy shrinks 10% in 1 year and an additional 6% the next year, and inflation explodes to 720%. It's no wonder then that markets expect Venezuela to default on its debt in the very near future. The country is basically bankrupt. Once again, we see a very respected mainstream publication using the phrase economic collapse to describe what's happening in South America. You can find some stunning video of the economic Armageddon that is taking place in Venezuela online. I would encourage you to watch it because, hold on, I lost my place. I would encourage you to watch it because what's happening down there will eventually be happening here. Meanwhile, over in Europe, the collapse of the Italian banking system has entered a disturbing new chapter. Italy's finance minister has called a meeting in Rome for Monday that will focus on the last resort bailout plan for the troubled banks. Finance Minister Pier Carlo Padoan has called a meeting in Rome on Monday with executives from Italy's largest financial institutions to agree final details of a last resort bailout plan. Yet, on the eve of that gathering, concerns remains as to whether the plan will be sufficient to ring-fence the weakest of Italy's large bank, Monte Paschi di Siena, from contagion, according to people involved in the talks. Italian bank shares have lost almost half their value so far this year amid investors' worries over a 360 billion euro pile of non-performing loans, equivalent to about a fifth of GDP. Lenders' profitability has been hit by a crippling 3-year recession. As Italy descends into financial chaos, the rest of the continent better be paying attention. Remember how hard it was for the rest of Europe to rescue Greece? Well, Greece has the 44th largest economy on the planet. Italy has the 8th. It would be hard to overstate the seriousness of what's going on over in Europe, and it's not just Italy we're talking about. All over the continent, major banks are in deep trouble, and the chairman of France's second largest retail bank recently told reporters that I am much more worried than I was in 2009. There's a very good reason for concern. On Sunday, we learned that a major bail-in had just been announced from one of Austria's most prominent banks. And then today, following a decision by the Austrian banking regulator, the Finanzmarktaufsicht, or financial market, I guess is how you say it in their language. Y'all probably laughing at me like crazy. Authority, Austria officially became the first European country to use a new law under the framework imposed by the Bank of the European Recovery and Resolution Directive to share losses of a failed bank with senior creditors as it slashed the value of debt owed by HETA Asset Resolution AG. Today, the Australian financial market, in its function as the resolution authority pursuant to the Bank Recovery and Resolution Act, bunch of stuff I can't read, Die Sumerung and Abwicklung von Banken, I think that's bank, von Banken, has issued the key features for the further steps to the resolution of the HETA Asset Resolution AG. The most significant measures are 100% bail-in for all subordinate liabilities, 53.98% bail-in resulting in 46.02 quota for all eligible preferential liabilities, cancellation of all interest payments from 1/3/2015 when HETA was placed into resolution pursuant to BASAG, as well as harmonization of the maturities of all eligible liabilities 31/12/2023. According to the current resolution plan for HETA, the wind-down process should be concluded by 2020, although the repayment of all claims as well as the legal binding conclusion of all currently outstanding legal disputes will realistically only be concluded by the end of 2023. Only at that point will it be possible to financially distribute the assets and liquidate the company. The dominoes are starting to fall in Europe, and I would expect even bigger announcements as the weeks and months come. Over in Asia, economic crisis is beginning to prevail as well. In China, the stock market is already down more than 40% from the peak. Chinese exports were down. Chinese exports, not experts. What a dumbass I am. Exports were down 25.4% on a year-over-year basis in February, and Chinese economic numbers overall have not been this poor since the depths of the last global recession. At the same time, the Japanese economy is really struggling right now. As I wrote about the other day, Japanese GDP has shrunk for 2 out of the last 3 quarters. We just saw Japanese industrial production experience the biggest 1 month decline that we have witnessed since the tsunami of 2011, and business sentiment has fallen to a 3-year low. The Nikkei has dropped by about 5,000 points from where it was last summer, and some analysts believe that Japanese markets are being destroyed due to massive intervention by the Bank of Japan. Of course, because the Bank of Japan is buying everything out there. I can't believe the Nikkeis went down at all since the Bank of Japan's buying all the damn stocks. Here in the United States, we haven't been hit quite as hard as the rest of the world just yet, but there are lots of very disturbing warning signs all around us. By the end of last week, we learned that it's projected that U.S. GDP will have grown by just 0.1 or 0.2% during the first quarter of 2016. And on Monday, a corporate earnings report from reporting season begins, and it's expected to be a very, very, very bad one. The following comes from the Business Insider. We are about to get confirmation that earnings growth for America's biggest companies was negative in the first quarter compared to the same period a year ago. When aluminum giant Alcoa releases its results on Monday, it will mark the unofficial start of the heaviest reporting season for S&P 500 companies. The final scoreboard is expected to show a 9.1% earnings drop for the quarter, according to FactSet senior earnings analyst John Butters. If these projections turned out to be accurate, it will be the 4th quarter in a row of earnings declines. This is something that we never see outside of a recession. And for a whole bunch more numbers which indicate the U.S. economy is in very serious trouble, see my previous article entitled 19 Facts to Prove Things in America Are Worse Than They Were 6 months ago. Of course, I'm just another voice in the crowd when it comes to predicting that the U.S. economy is headed for rough times. For example, just check out what Societe Generale economist Albert Edwards is saying. A tidal wave is coming to the U.S. economy, according to Albert Edwards, and when it crashes, it's going to throw the economy into recession. The profit recession facing American corporations is going to lead to a collapse in their corporate credit. Despite risk assets enjoying a few weeks in the sun, our fail-safe recession indicator has stopped flashing amber and turned to red. The whole economy, profits never normally fall this deeply without a recession unfolding. And with the U.S. corporate sector up to its eyes in debt, one asset class to be avoided, even more so than ridiculously overvalued equity market, is U.S. corporate debt. The economy will surely be swept away by a tidal wave of corporate defaults. As you can see, it isn't just one nation or one region of the world that we have to be concerned about. Economic chaos is literally all over the planet, and global leaders are starting to panic. Unfortunately, they've had 7 years to try and fix things since the last global recession, and they didn't get the job done. Anyone that believes by some miracle they will be able to pull us out of the fire this time and that everything will somehow be okay is simply engaged in wishful thinking. So my advice to you is stay out of the stock market, stay out of the bond market, invest in precious metals, stock up on water, stock up on food, stock up on some way to defend your family. and hopefully it won't get as bad as it is in Venezuela. Till next time, keep stacking, guys.